Okay, everyone, this is David Russell, VP of Market Intelligence at TradeStation. Welcome to our webinar, Finding Opportunities After a Market Crash, the Art of TradeStation, one of our ongoing series. Hope everyone can hear me. I'm going to start with some initial disclosures, and then you can start seeing some of the things I'm going to share with you. Let's just make sure this is working correctly. I believe we are now rolling. I think so. All right, good. Let me just see my screen advance. I'm waiting just to make sure YouTube is working correctly. Let's see. All right, here we go. So I'm just reloading this on this other screen. All right, folks, very good. The following presentation is for educational purposes only. All symbols and trading ideas discussed by the instructors are for demonstration purposes only and are not recommendations. This presentation is not an offer or solicitation of any kind in any jurisdiction where any TradeStation affiliate is not authorized to do business, including but not limited to Hong Kong and Japan. Active trading is not suitable for everyone, and options trading and futures trading carries a high degree of risk and is not suitable for all traders. Please read the disclosure information um, in the electronic disclosure information. It's available on the TradeStation website. It's also been shared in the chat section on YouTube. Also, you can ask questions in there, and I'll be turning to those as they come along. Let me just go ahead and progress here. So what are we going to talk about today? I want to talk about some of the different issues that face traders and investors at this time. I mean, for one thing, this is one of the strangest environments for investing or the economy or the country really in a long time, century or so. I was just want to mention today's economic data it's all been worse than expected, way worse than expected for the last couple of weeks, and today just got worse and worse for these retail sales numbers and everything else. So we're in a very strange and challenging environment, and I think that's important to realize. Some of these tools I'm going to share with you help you to really see how exactly the market is behaving, not just how things are behaving in terms of what people say should be happening, but what's actually happening. And very often we find that what analysts or experts might think is not necessarily true. Now, we all know this. We all have different ways of finding where the opportunities are in the market, but some of the tools TradeStation has and the ways I'm going to show you to use them today can help you find more of them and find them consistently over time. Maybe you know a few now, but the thing is, there's a lot of ways you can use TradeStation to capture those things. So right off the bat, we did share some links. They're coming through now in YouTube. One of these links goes to a zip file, and the zip file contains various tools. So first of all, you need to be using TradeStation 10 in order to do this. And there's going to be two things. So hopefully you're going to find the zip file. I can't see exactly what you guys are at right now, but I believe it has been shared. And I want to then show you what it looks like when you open this zip file. It contains two things. This ELD file, see it says Easy Language Document File. You want to double click on this first. Now you want to make sure you have TradeStation open and you're logged in. You're going to double click on this and it's going to import a bunch of custom indicators that I'm going to discuss later. But it will ask you a couple of things like, do you want to import them, all that sort of thing. You just go ahead and then it will say it's been imported. Import those first and then double click on the Art of TS April 2020, the workspace. The workspace uses the indicators, so you need to load the indicators first. I don't want you guys to have any trouble with it, having issues of not having the indicators that are in there. So go ahead and do that now, and then you're going to be ready with some of these tools that I'm about to talk about. Okay, so some people are not seeing the zip file. There it is. So if you see there, it says TradeStation Indicators Zip. It should be in the chat session on the side of YouTube. All right, let me just keep going there. All right, so first I'm going to very quickly tell you about some of the tools we're going to use on TradeStation to do that. Then one of those tools is called Scanner. I'm going to show you that. I'm going to show you radar screen, and then I'm going to show you some other ways you can go beyond just looking in this current market environment. So, one of the issues is that when you have a market getting liquidated the way ours was a few weeks ago, people just sell everything. And it can be really difficult sometimes to separate the wheat from the chaff. And you go through these cycles, and then some stocks hold up well and you think, oh, that's great. This stock has done really well. And then the next day it gets liquidated along with everything else. This is a problem of having correlation. But the thing is, there are ways to see through that in terms of price action with these tools I'm going to show you. One of the things we're going to do is we're going to learn, and not a lot of tools out there let you do this. We're going to learn how to go back and see what the strength was in the market at a certain moment in the past before the tornado of volatility hit. And that's important to do, because most tools, they look at what's the year-to-date return, what's the best stock in the last month. What would happen if you could go back and say, what were the top performing stocks immediately before the coronavirus storm hit? And that's what we're going to do with some of these indicators. Another thing right now is that you see certain things emerging that completely trump fundamentals. And we've seen this before in the market, where people really don't care that much about stocks being undervalued. They're focusing on certain areas of growth stocks. And in many ways, that's good, because it shows that people are excited about the growth opportunities being offered by some stocks. However, they're completely throwing out other kinds of companies, like energy companies, a lot of industrials recently, small caps. How do you see those differences? That's what some of these things are going to be. We always make our money essentially from stocks going up or down, which means price is really everything. Fundamentals sound nice and they are important, but we don't always really see fundamentals until sometimes quarters and quarters after they happen. The price will happen first. That's why we're seeing certain stocks like Zoom Media or Zoom Video, which we're using right now, go flying higher. That's the sort of thing that we want to be looking for. So our goal is to find longer term growth stocks with the potential to outperform in coming months. We don't necessarily want to hold them long term, but we want to know those names that are going to give us swing opportunities. They're going to accelerate higher. Or at least have the potential to. We never want to, say that it's necessarily going to happen, but we want to be looking for those companies that have clear money flowing into them. And the other thing we want to do is we want to find those companies that have good options liquidity. For me, it's all about options. Very often we want to find those companies. And the great thing about some of these technology stocks that are going to pop up is that they trade a lot of options. And that means we can leverage those moves with options. Now, speaking of opportunities, I did want to mention that one of the main things I do here at TradeStation as VP of Content Strategy is I kind of run two content streams that we do. One of them is the Market Insights blog, and the link for that was shared. It's at insights.tradestation.com. For some reason it's showing. Here we go. And some of the things I've been writing about are in here. And, for example, we were writing about things not very long ago about how Amazon was coming right back to the $1 trillion, market cap. This was back on April 7th. Here we are a week later with Amazon breaking out to new highs. We were writing about Tesla. We were writing about Netflix right before these things happened. We were also writing over here, and the other place where we generate a lot of content is with our partnership with TradingView, where people can trade directly from TradingView, and it links up to their TradeStation account. And we were writing about different things recently, like Zoom Media a few days ago, bouncing at the 50-day moving average. We found these scans. We found these opportunities using scans similar to what I'm going to show you. If you look at something like Zoom, here it is. We identified it at the 50-day, nice bounce since then. Things like that. These are the sort of things that we found. Also to the downside, Dow Chemical, we were pointing at this one. This one had a strong bounce, and up to the 50-day moving average, we identified it as a potential short, and there you can see the downside move. So basically, I wanted to show you, these are some of the things that I generate, and these are some of the results of using some of these methods that I'm going to show you. Okay, so first, easy language. What is easy language? Now, easy language is a relatively simple coding language. Now, I'm not a developer, but I've learned how to use this. And if you learn how to use things like Excel or a lot of other stuff in the modern world, we have to learn a little bit of software and working with technology. Easy language is part of the TradeStation system. When you go to the platform, which I'm now going to do, here's our TradeStation platform. Okay, so you find your easy language by going to this thing here called apps, and there'll be something called easy language. So if you click on that, this is my easy language basically this is a place where you write software. Now, what's interesting, or you write code. These are technically indicators and things. And what happens is that the indicators that you just loaded from that ELD file will now exist if you go looking for them here. And I'm going to show you what they are, but this is where you find them. You're going to go to apps and you go to easy language. Now your easy language might be somewhere else because you can move these little tools around. I'm not sure the original default setting, but if you look here under apps, the next thing we're going to look at is radar screen. This is radar screen. Very nice tool. One of the most popular things on TradeStation, and you find that by going on apps, and then you go to radar screen right there. I don't think its default position is there, but I love it so much that I put it on my top left. The next thing we look at is scanner. Now, you guys, this is the workspace right now that you would have loaded. You can notice it's called Art of TS April 2020. This is the one that if you after you imported the ELD files, then you want to interesting. So I just want to mention one person apparently had an older version of TradeStation. You're going to want to update it. So what I would just suggest you do is just watch the video now, get a sense of what it is if this happens for anyone else. After you upgrade your TradeStation, this video will be available on YouTube, and you'll be able to do everything. But this is the workspace. After you import the indicators, like I mentioned, double click on the workspace. This is what you will see. However, your scanner will be different. The reason is because scanners are independent of the workspace, and there's no way I can share the scanner with you. So we're going to build the scanner. It's very simple, but you will see the scanner here, but it's not going to have the same results that I have. However, your radar screen should have the same sort of results that I have. The next thing I want to just mention is I have something enabled called symbol linking. This little, when you see the little green here, you'll notice that radar screen and this both have this. You can turn this on or off. What this means is if I click on a symbol, it will automatically load that symbol over here. Just make sure you have your symbol linking turned on. You can have different colors, so you can have like multiple relationships. You can have like, one radar screen that goes to this chart, one radar screen that goes to another chart. Just make sure the colors are the same. And let me turn on my symbol linking also for scanner. Okay. Let me go to my next slide. And good. Okay. So you imported, if you double clicked on that ELD file, you imported 3 indicators. Now, for the sake of simplicity, you'll notice that I put the # at the beginning of all 3 indicators. That way you'll know that they're for this webinar. So these are the 3. One is called bar num plot, and this actually draws numbers on the chart showing what bar you're on. The other one is a label. It basically this one puts the label, puts the number on the chart. The other one creates a little indicator at the bottom of the chart in the subchart. Then you also have this indicator called 2-period changes, and it shows the price performance of a stock over 2 different time intervals on radar screen. Now, by default, it's set to 36,274. Why? Well, I'm going to show you that in a minute. The last thing is days since 52-week high low, which you can see, WHL. This is a more sophisticated tool. It uses easy language objects. So some of you guys probably do know some object-oriented programming. You don't need to know it. You just import it, and then it works in radar screen. But this essentially outputs 3 values. It counts how many days since a 52-week high or 52-week low. So now think about this. American Airlines, it hasn't hit a 52-week high in like a year. It's a very simple metric that tells you when you're sorting for stocks that it's a weak stock. Now, obviously, most people probably know American Airlines has been struggling, but this is a way that you can quickly find stocks that have been outperforming or underperforming. There's many ways, but this simply counts the number of days since it hit a 52-week high or a 52-week low. The other thing this plots is it shows the range between the 52-week high and 52-week low where the stock currently is. So a higher number is more positive. All right, so why do we use these time intervals? Let me go back to my chart and show you. Now, what we're essentially looking to do is we're looking for stocks, and I'm going to start off by showing you some of the results. We're looking for stocks that essentially were outperforming and rallied a lot before the coronavirus crisis hit. And then we're looking for those stocks as opportunities to lead on the way back. So essentially, I'm going to start off with this scan. This is a thing called 2-period scan. Now, what this does is, now I'm not going to run the scan because when I run the scan, it'll slow down my internet, and I don't want to compromise this, the quality of this presentation. But what we're going to do is, you can create here in the scanner, you can add criteria. So one of the first thing we want to do whenever you use scan, this is just a little trick that will make your life easier, is you want to reduce the number of stocks that you're scanning because it will make the scan a lot faster. So if you start a scan, for example, you create a scan, you're going to just let's call it test scan, right? And then we're going to go to next. You're going to say, what symbol list do you want to have? Now, we want all stocks, and there's a reason for this. In other cases, we're going to look at like the S&P 500. Now, the problem is some of the most interesting stocks, I'm thinking of one company in particular. It trades a vast number of options. It goes up a lot. It makes electric cars. It's very popular, and it's not in the S&P 500, and it's called Tesla. So now the problem with the S&P 500 is it doesn't always include the stocks that are most actively traded. It does include some other stocks that no one ever trades, like Chubb and Smuckers or whatever. So the nice thing about using this system is it's going to help us find those up and coming technology stocks like Zoom, like Roku, that are not in any indexes. Some of these Chinese stocks that are kind of coming in that are becoming more popular. Some of these are not in the S&P 500. They're not in the NASDAQ 100, but they might trade a lot. And so this is a nice thing about, we want to include all stocks. Now, the next thing we want to do is, once we say all stocks, then what we want to do is we want to have a criteria. And the criteria that we always want to start with, or in my view, we want to start with volume. And then what we want to do is we want to say volume average 10-day greater than, and I always just put in the number 500,000. Trades at least 500,000 shares a day, or I don't even want to see it. That's going to instantly cut down our universe of stocks by about 80%, and it's going to focus us right in on the things that are interesting and active. So then like I said, I'm not going to run all of this, but the next thing that we're going to do here that I have in this scan is I have market capitalization. Now this is set in millions. So 1,000 is a billion. So there's another category for capitalization. You want to set that over 1,000. For example, I don't want to see stocks that are less than $1 billion, but you might want to change that yourself. Now, another thing is the open interest of calls and puts. Now, this is something that's a little trick that I use sometimes, that basically, if a company doesn't have at least 100,000 total open interest, it basically means that nobody trades it with options. So if you simply set this at least 100,000, it's going to scan out all those boring companies like, I just look over here, and this is the same indicator here. You can look at a company like Mettler Toledo. I mean, no one ever trades this actively. It's some kind of medical, I think it's a medical device company. Very, unglamorous stock. Not to say it's a bad company, but it's not actively traded. And one of the easy ways we can see that is with this open interest indicator. Now, this is radar screen, but it's using the same data that comes up over here. So one of the things we want to do is I want to set open interest at least 100,000. And that's going to be under my, that is under the options. There's a set there for options data. If you look, it's going to be under options related data. It's going to be called open interest calls and puts. So for example, so anyway, I ran this scan. Like I said, this scan, depending on the speed of your internet, could take anywhere from 3 to 10 minutes to run. And the result, now the other thing is, I forgot to mention, it also includes the custom indicator 2-period changes, which I just mentioned. Now, what does this indicator do? This indicator allows us to look at the return of a stock before, and then after the crash. And so, you know what? I should have actually done radar screen first. This is what it looks like in radar screen with 2-period changes. And what we're seeing here, it shows us the past return, by double clicking on this, is going to let us see these are the stocks that were up the most before the crash. And you're going to see Advanced Micro Devices right there. Other companies that are very well known, like Newmont Mining, was rallying before the crash. So what's interesting is the purpose of this is that this number would not change regardless of what the market was doing, because it's set back in time. Now, how do we know that? The way we know that is that it's in the easy language code. So if I go here to the, another thing you can do is if you right click on this and you go to studies, edit easy language, we can actually see our code now. So essentially what this does is this starts off with an input of the start days and the end days. And I set that to 36 because that's how many days ago the crash was in trading sessions. And then the end days, that actually is going to tell us, in this case, the way it's set up, that's the beginning all the way back. So what this is going to tell us is 273 was a year ago. The way we find this is the other indicator that I have set up. Now I have this other chart. You're going to notice when you look here at this workspace that there's another chart. This chart numbers the sessions. I should have shown this first. This numbers the sessions. Remember, like I said, there's indicators that put little numbers here. These numbers are also down here in this indicator. So if you go along, you're going to notice where it says plot 1, it's going to tell us we are currently on day 252, for example. And then basically it counts back in time. And then this way we actually know. So if we look, where did the crash really start? It started here on February 24th. So basically what this does is if you look back, what you do is you would take this number 253 that you see, that's the number of day that we're on. Now these numbers themselves, they start from the left and they go to the right. We just want to use them to find the moment in time that's our reference point, our before and our after. So in this case, we're now on candle 253. All right, so you take the number 252. It's actually, and then you subtract this number here. And then you actually are going to come up with this 216. You're going to come up with the number of sessions since the crash. And then what you're going to do is you basically know, okay, the crash was this many sessions ago. And then you're going to put those in as your start days and your end days. And so, this is set, this is set to a different number. So I'm going to just quickly change this. We're set to, let me just see what this was set to. Set to 274 and 36. See, I did this over the weekend. All right, so this now tells us, well, the numbers are similar. So essentially what we're doing is we're saying we want to start the beginning of period 274 sessions ago, and then we want to end that period 36 sessions ago. That is going to tell us the history, this whole period of time leading up to the crash. So this is going to tell us in the first column all the stocks that did well before the crash. And then it's the second number in the second column is the price return of companies after the crash. So now as you see, you can see in the year leading up to the crash in the S&P 500 in this case, because this is radar screen, you're going to see that basically Advanced Micro Devices was the top performer. Now, this is exactly what we want the scan to do. The scan could have been used, for example, a few weeks ago, and it would have told us Advanced Micro Devices was a strong performer, and you can see now how it has been one of the strongest performers since that time. It's actually higher since the correction started. Now, we were actually writing about Advanced Micro Devices, just so you know, on Market Insights and on TradingView, because we were using this same scan a few weeks ago. It identified this as an entry back around here. So the key thing is what you're doing is you're breaking the price action into two groups, before and after the event. You're looking for good stuff before the event, and then you're looking to see how it might perform after that. Now, the thing you're doing is you're using this chart to actually count your sessions. The only point of this chart here is to count your sessions. So, and instead of just counting each bar, you can just look at it and say, all right, we have candle 250, 252, and then minus candle like, right here, minus candle, 216. That gives us a number of days, and then we plug that in, and then we go off to our other indicators. See, so now the thing about scanner is being set here to return on 2 period changes. It's going to return, it can return one of two values. It can return the past return or the current return. And in this case, the past return, that's the one before the crash. We want it to be greater than 1 because this returns percentages, which are decimals. So if it's greater than 1, it will show all stocks that went up at least 100% in the period of time 1 year ago until February 24th. And also that trade at least 500,000 shares a day, that have a market cap of $1 billion, and that have at least 100,000 open interest on the options. That basically means show me stocks that were rallying before the crash and that trade a lot of options and that trade a lot of equity and that have a market cap over $1 billion. That's what it will give you with this scan. So if we look at the results, you can actually see, now you can sort. Now this is going to point it out as a number, not as a percent, because that's the way scanner works. But you're going to quickly find that some of the most dynamic and bullish stocks in the market suddenly emerge. You will notice, for example, Enphase. I don't know if you know this, but this is a very fast growing solar energy company that we've written about many times on Market Insights. Another one that comes up on the list that's kind of interesting that I found was a company called Ballard Power. Now, this company started rallying late last year around the same time as Tesla. They have a technology that is different, but it also is an electric vehicle technology that is in some ways analogous to Tesla. It's a much smaller company. It's a different industry if you read about it. They do things for power, for electric forklifts. But this was a stock that was rallying along with Tesla. Now, speaking of Tesla, Tesla is also on the list. Stocks like Solar Edge, another fast-growing solar energy stock. People might not know this, but solar energy was the strongest industry in the market last year. And it's something that people might want to know about. You might not see that reading CNBC or Market Watch or the Wall Street Journal, but if you have scanner running, if you have radar screen running, you're going to see this. And these are the sort of things that we write about because, for us, we care about price is truth. We're looking for the actual relative strength. But here we have Tesla right there on the list as well. So it would have identified Tesla as an interesting, bullish sort of stock. Things like Shopify. So these are the companies that some of us know, but there are other companies out there. A company like eHealth, for example, has been one of these fast-moving companies. Some of these other companies on the list, Advanced Micro Devices, Ring Central, Eldorado Gold, all these stocks pop up, and these were stocks that have been outperforming. And in many cases, they have rallied back more quickly after the crash because there was money moving into them beforehand. So when you do this, what you want to do is, let's go back to my PowerPoint now. Okay. Wait a second. Let me see if I get this. There we go. All right. So what we're doing is we're using Scanner. And we're going to find companies with Scanner that have that past change over 100% return. So that's one of the tools we can use with Scanner. Now, I'm going to go a little bit out of order. And I'm going to go to what you do with radar screen. Now with radar screen, you can use the same indicator called 2 period changes. So say you should have it in your radar screen right now. And what you'll notice is that I imported the S&P 500. That's already in your radar screen. So if you look now this is different than Scanner because with radar screen, you have to provide the list of stocks. So what I do is I go to data, I go to add symbol list, and I go to S&P 500, which I already did, already loaded. And then what I did was I had my 2 period changes here, and then it already was set to the time interval. And you can change the time interval by clicking on it and then editing it. and changing the settings there. And then what you simply do is you click on the columns and you can see who's doing well and who's doing badly over different time frames. And what's also interesting about this is you can use it in different ways. You could find, for example, a week or two ago, a lot of these companies like the cruise lines and all these stocks were down 70, 80%. You could have said, show me all the companies in the S&P 500 that are down the most since the correction. In fact, it already says that right here because we set the shorter time frame. We have two columns here. We have our current return right here. And what this allows us to do now is we can actually look and we can see, look, there's Norwegian Cruise, there's Apache. These are the companies that are down the most since the correction. So if you're looking for companies to that you believe, maybe you like to look for value, this is a way to find them. Another thing you could do is you could look for companies that fell, say it's a month or two in the future, the market holds its ground, say some of these stocks rally, something happens with energy, things get better, and then you want to get bearish. You can do is you can now change your time frames, and you can use the period from the crash until now as a time frame to see what was down the most. So you could say, you could go over here and then you could say from this point to this point, you count those bars and that's your past period. And then you say, who is down the most? And then you say, who's up the most since here? You simply change the period changes over here. And then what would happen is you'd be looking just the opposite. You'd be looking for things that were down a lot, but have now rebounded. And you can easily see them with these tools in Radar Screen. So let me see if I have any questions now. Okay, let me just start at the beginning. Okay. I see a gentleman with TradeStation 9.5. You will want to move up to TradeStation 10. Okay. So this only works in the desktop version of TradeStation. What moving averages and indicators do I have on my chart? So in this case, these are just some standard. I have the 200-day, the 100-day, the 50. And if you have the workspace, by the way, if you simply go to studies and you go to edit studies, you can actually see all of these. These are all existing indicators. These are the same ones, by the way, that I use on Market Insights. But these are the ones you're seeing right now on the chart. They're all simple moving averages. You can add other ones if you like. Can I try TradingView free for an existing account? I'm not sure. If you would reach out to customer service on that, I'm not sure. I don't want to give bad information on that. All right. There are ways. So people asking, do you provide paper money? There are ways. There is a way you can turn on your simulated account. I want to mention that we have two other guys, Mike Burke and Jesus Nava, who are total experts on TradeStation, and they provide these classes, with these master classes as well. So you might want to check out some of those that are available through the TradeStation.com website if you go to the Learn section. Okay, let's keep going. Is there a blog on Market Insights? Market Insights is a blog. All right. So I hope you guys see. I'm going to very quickly review because as I actually look back, I realized I should have shown you this first. It's just you want to essentially, and these numbers are arbitrary. If you go to data, edit symbol, in this case, I have it set to 1 year back. You can set it to 5 years back, and what you're going to notice is the numbers now increase. So this just starts on the far left of the chart and it numbers from left to right. And this is just a simple thing, but you can look back and you can see the date. You can see, oh, like this date right here has, on June 29, 2016 was candle number 305. And then this is candle number 435, blah, blah, blah. You can then do the math, boom, really quick. But these numbers are based on how many bars are loaded into the chart. And you're going to control that by going to edit symbol. I want to just mention that. So this is just our starting reference points, and this has two of the indicators. One of them renders on the chart and one of them renders in the subchart. But aside from that, that's the only thing we're using it for. We first find our time references. We're finding our beginning time period, and then we're finding our break in the time period. Is like the one from a year ago and the one from February 24th, which was when the market really started to crash. It was that Monday we came in. There were coronavirus headlines over the weekend. We came in on Monday, and then volatility just started going crazy. And by the way, we were writing about that on Market Insights. We were writing about very quickly saying that this is a major volatility event. If you go back and look, you can see we had articles right at that time kind of guiding people toward the index trading. I'm a big believer in pivoting toward indexes when things get crazy, pivoting away from stocks, and then when volatility comes down, going back to our stock picking. And that's really what this is all about. This webinar right now that we're doing is about going back to stock picking. We can move away. I mean, we love trading minis, we love trading SPY, but there's a point in time when that volatility is going to calm down, and we're going to want to be looking for relative strength and looking for individual stocks, and that's what this class is all about. And it also works for the downside, looking for stuff that had bounced a lot. We had actually put up a trade idea on TradingView, when Dow Chemical, we used it. Basically, I used a similar technique that it was up a lot in the last 2 to 3 weeks. And it came up on as being up a lot in a short term, but I knew it was down in the longer term. And that was, to me, just a classic signal. And that's why we did that. And look, it just hit the 50-day, and this is a 50-day, and it just, tanked on that. So anyway, this is some of the ways, that you can use that. So also, just so you realize, this is open interest. So the same thing here, I want to show you another trick, because, who really cares about this company? What is this company? Duke Realty. I mean, who really cares about Duke Realty? Who cares about PerkinElmer? I mean, these are not stocks that people trade. So what do you want to do? I don't want to see those. On Scanner, we said, hey, if it's less than 100,000 open interest, off with your head. I don't want to see you. All right, so how do we do that in Radar Screen? It's insanely easy. You just basically double click on the column. It's going to sort by the column. And then we just say, all right, if you have less than 100,000 open interest, I'm going to just go down, and you're just going to hold down the shift and just go down to the bottom, and boom, goodbye. You're gone. Delete. It's like, imagine you're using Excel. You just highlight, hit delete, done. And now they're gone. Now we're dealing with a much smaller universe of stocks, which can make it easier to see. So I want to just point that out. The nice thing about Radar Screen is that you can then sort on a column, get rid of the stuff you don't want to see, and then go back to sorting on the other columns. Okay, that's using 2-period changes. Now we have this other indicator that I had mentioned, and that's called near highs. Okay, now there's near highs is a more sophisticated object-based indicator. Now, you can look at the easy language on it. I'm not going to go through the easy language on it, but it should work. You should be seeing it. So you'll notice on this Radar Screen, there's 2 tabs. I was looking at the 2-period changes tab, but there's another one called days from high. And now if we're looking at this, what we're now going to see is this is a different sort of setup. This is going to show, you'll notice this is the indicator right here. It has 3 columns. It has the percentage range, TH days, which means trading. This is some coding that we had come up with in-house, but it means trading sessions since a 52-week high. It means, trading days high. So this is how many sessions since the stock hit a 52-week high. And because it's, less than, it should actually, I'm not sure why, it should be showing smaller, like zeros here. But basically Amazon, well, it hit a 52-week high today. So those are, for some reason, these zeros are not showing up numerically. They are there. So you'll notice that all these stocks, you'll notice it's counting up. And you'll notice there's a little arrow here. That means that we're sorting by that column. So here we're seeing the things that are, see, it's been American Airlines, like I said, it's been 252 trading sessions since this thing made a 52-week high. And when you consider that there's weekends and holidays, 252 trading sessions is pretty much a year. So basically, this stock had a high from a year ago, and that is its 52-week high. So, I mean, you notice that these are the weakest names, things like, some of the oil and gas names. These stocks have gone forever without, international paper, they've gone forever without making 52-week highs. So that's a bearish indicator. Now, you can do other things where you say, show me the, you can look for the ones that have, gone a long time without making a 52-week high that are also, now here's a little thing. You could add this with the other indicator. And you could say, show me things that have gone 252 days without making a 52-week high. And then you could also say, but also show me the ones that are up at least 10% in the last week. Well, now we're suddenly looking at stocks that have bearish patterns, but they've had rallies, which means we're looking at potential shorts. And a lot of these stocks, you could have identified some of these names, like American Airlines or whatever. I mean, this one would have popped. I mean, this one now I don't see, but a pop like this would have, this indicator would have worked. It would have been flagging it. In fact, I know it was, because I was using this indicator at the time. It was flagging it all the way down. And if you look at some of these Occidental Petroleum, whatever, so this is going to find companies that have a pattern of weakness, stocks that are not making 52-week highs. You can then cross-reference that with something else. You can cross-reference it with ones that have a shorter term bounce, and that can help you find potential downside opportunities. So this is relatively, simple. You just click on it, and then I think you guys can see now. Say you wanted to add one of these other indicators. So what you can just do now is you say, go to Studies, you go to Add, you go to Studies here, you go to Add Study. Now remember, the indicators that I created, they start with #_. So they're going to be at the top of the list. 2 period changes, just pipe it right in. Okay. And then we're going to look at stocks. And in this case, let's change our time frame to stocks that are up a lot in the last 10 days. Now, this is for our, and what you're going to see is, you're going to, you could have found in this case, if you look for stocks that have gone a long period of time. Wait a second. Put them backwards, 273 and then 10. This would show us stocks. And you're going to see a stock like American Airlines. See, this one is down in the longer term, 61%. In the last 2 weeks, it's down only 1%. But if you had looked at a stock like this here, it would have been up a great deal. This short-term current return would have been a very positive number. I mean, look at a stock here, and these are not recommendations. When you look at some of these, a stock like, Cabot Oil and Gas. This is a weird company. There's very strange reasons why this one's been rallying. But you can see some of these companies that have lagged. They haven't made 52-week highs in over 250 sessions. And then you can actually see, oh, but they're up a whole bunch in the last, week or two. Advanced Auto Parts. That's an interesting one. Look at that chart. I mean, that's kind of interesting if you're not feeling bullish. So, I mean, these are the sort of ways you can use these tools. Let's see if I have more questions. There are people who are noticing that they're not getting the open interest. It's possible. It's possible that you do not have access to. Some people don't have the open interest data. I thought most clients would, but if you have options data, like with Options Chains, OptionStation Pro, you should have it. Now, another thing I want to just emphasize using Radar Screen, and this is just one little thing to be careful of, is that Radar Screen, I'm going to open a new page. You'll notice that the time frame is often going to be set. If you just start adding stocks, it's set to 5 minutes. So if we import, say we import the NASDAQ 100, okay, you'll notice these are all set to 5 minutes. And these indicators are designed to work with daily candles. So you're going to do is you're going to hit Control A, select all. You're going to go to time frame. You're going to set it to daily. Now, what I like to do is I like to you just highlight the column and delete. I like to delete all of those. And now I want to do is I want to just add a study. And I want to just add, for example, 2 period changes. Boom. And now, right off the bat, this is going to show me the companies. Now, this is a NASDAQ 100. This is a different set. But in this case, this is also going to show the same thing with the past return. And now you can just see how you can start with this, very simply. Now, let's just see here if this is set. The daily. It's interesting. In this case, let's see what our intervals were even set at. See, this was set for some, I actually have to tell you something. I'm noticing now that in the code, it seems to have the days backwards. The start day should be the bigger number and the end days. So now we're going to see like Tesla, Advanced Micro coming right up on our list. So these are the ways you would use Radar Screen to find these. And you can just create your list. Now, since you guys are such a good audience, I'm going to actually show you another tool that I quite like. And this is something else. I'm going to simply share. I think I can just share the text here. This is another indicator that allows us to see stocks that are above or below certain moving averages. Now, right now, if you look at the S&P 500, you can actually only, there's fewer than 100 companies over their 100-day moving average. So I created this indicator. It's very simple. And what it allows us to see is above the 200-day. This shows if a stock is above or below a moving average. In this case, it's by default, it's set to the 50-day moving average. So I can go and I can edit that. And I can set it now to 200-day. And it's going to very quickly help me to identify those companies that are, above or below the moving average. It's just a simple way. Now, this is the NASDAQ 100, but if you do it in the S&P 500, you're going to also see that there's not many companies, and you're going to see that most of the companies that are, for example, technology companies, energy companies are going to be mostly below the 200-day moving average. So, I mean, quickly, if we were to simply delete all of these, go to data, add symbol list, S&P 500. It's going to quickly import. And you're going to notice it's going to quickly build this list. It takes a second to load, but you're going to notice, here's Apple, but then here's all the names that are below the 200-day moving average. So these are other things you can do, but then you can look at them and you can say, well, show me ones that are below the 200-day moving average, but maybe the ones that are up a lot in this short-term period. So you can see, here's an interesting one. Kraft Heinz, it's below its 200-day moving average, but it's also rallied pretty well in the last period of time. That looks like one that you might. So I mean, this is not just for finding bullish things. It's by combining things like moving averages and things like longer term performance against shorter term performance, that you can essentially find things that have made counter trend moves. The trend is higher or lower, and then you can find things that have made a counter trend move in the shorter period of time. So you can use this to find your long-term growth stocks like your Teslas or your Advanced Micro, but then you can also use it in a shorter term tactical way to find those companies that have gone against the trend. So I'm going to just quickly show you this code for my moving average above below. And if you're ever looking at an indicator on TradeStation and you simply go to the indicator itself, you go to studies, you can just go right here, edit easy language for this thing. And it will bring up the easy language, which I have right here. Okay. So now this, see if I can make this bigger. I want to just share this with you guys because it's very simple. And I think I can just, here. I'm gonna simply paste it. But what this code essentially does is it first asks you for an input, which is what moving average, the 50-day moving average, a 200-day moving average. And so you'll notice that this number, this 50, is the same number that is in the input when you create it. And then you can change it, but it's called MA to test. That's the same thing right here. Then you have to define a couple of variables like what average, and then there's this little bit of text. When I create a message, it actually puts together a little sentence that simply says above or below. This average here simply calculates the average, and then if the stock is above the moving average, then it builds this little message and it colors it green. And if it's below, then it builds the message above or below, and then it basically plots the whole thing out in a little phrase. So it's less than 10 lines of code. I'm going to share it right now into YouTube. hopefully, you know what, it's too long. I'm going to cut it in half. Here's half of it. And here's the other half. Make sure you have both halves in order. Okay. Let's go back to my PowerPoint. Okay, so I showed you now how to essentially this works with Scanner and how it works with Radar Screen. Now with Scanner, actually, there's one more thing I want to show you with Scanner. Scanner has a different function that we want to use. And here's my scanner. Go back to Scanner. This one is called near highs, I called it. Now this we're using the same thing where we want to look for things that have at least that trade, you know, at least 500,000 shares a day, a market cap of at least 1,000. Now here's the key indicator that we're going to add in this case. We're going to add, and this is going to be under our under price, because when you add this, you have these categories here, and one of them is price. So if you go to price, and then you go to one which is called percent of 52-week high and low. So this is going to be similar to that indicator that we are using in Radar Screen when it shows the range. That indicator in Radar Screen returns a decimal because it's a percentage. This one will return an integer. So 80% on this is going to be 80 as an 80. So just realize that. In this case, percent of 52-week high or low. And so this basically says we only want to see stocks that are within, if you take that high and low, that are in the top quintile in terms of their of the range. It's not technically a quintile because it's not a standard deviation. But the idea is that you're taking it, say a 52-week high is at 200 and the 52-week low is at 100. We only want to see the stocks that are over, say, 180. It's going to take that range. And then it's going to show where in that range is the difference between the high and the low. And then it's going to basically say where is the stock in that range. So this will also show us stocks that are near highs and lows. And then you can see the results. The results come up right here. And once again, if you look at, I ran this scan a couple of days ago, but the numbers are still pretty close. At the time I ran it, it says right here, I ran it on the 10th. So I ran it, last week. But what you're basically seeing is that you're seeing a stock like Newmont Mining at the time it ran, that was at 100% of its range. Gold, Chewy, which is this pet supply company. Now, what's interesting is most of these companies have continued to make new highs. So by running this scan every week or so, you're going to be able to find companies that are pushing their highs. Now, at certain times, a lot of companies are making 52-week highs. But when you're looking at a market like we have now, it's pretty interesting to find that handful of companies that are near their 52-week highs. So I wanted to just emphasize, as you see some companies like Netflix. Now, I ran this scan on the 10th. So let's look at Netflix. Let's go back and actually look on the 10th. Where was Netflix? At this point, Netflix was at 84% in its range, and the 10th was the weekend. So basically, using it as this entry point right here on the 10th, you can see the breakout that came in Netflix. Another stock was JD, which is a Chinese internet company. It came up right there. Actually, the scan came up there and then went on to make a 52-week high right after. So by using, and now this uses no custom easy language at all. These are all things built into TradeStation. But this can help you find things that are near highs or lows. So I want to just mention that. There's other things you can do. You can go into something like Scanner, and you can say, I want to find things that you can do the same thing we were doing in Radar Screen. You can say, I want to find stocks that are, the range is less than 50, which means that they're near the lower end. But you can also say, you can add another criteria, which would be price. And then you can say percentage change. And then you can say net change 10 days greater than, say, 10%. What does that mean? It means you have a stock that is lagging, it's at the bottom of its range, but it's had a short-term rally in the last 10 days. So that's going to find potential short opportunities. And then you can flip it on your head and do the same thing. I want to find stocks that are 80% in their range, but they're down at least 10% in the last 10 days. something like that. And you also want to say, hey, I want to make sure it has $1 billion market cap. But by doing these kinds of combinations, running these scans from time to time, and you can also automate the scans, so they'll run every few days, and then you just go and look to them. You don't even have to mess with them. You can have them run and then come back to them. By doing this over time, depending on what kind of strategies you're looking to do, there's a great opportunity to discover stocks, and I wanted to highlight that. Now, the things I just said, those are always true. The real thing that got me excited about doing this webinar was the fact that when we have a market event like we've had recently, very often what you're going to find is, and I've noticed this many times in history, but a great example was back in early 2018 when the market crashed. Amazon basically, like, it went down and touched its 50-day moving average, and then it just kept flying. I mean, and the thing is, it was rallying. Now, I mean, this is interesting. It's doing so well now, but if we go back, I kind of conceived of the scan back here because this was a stock that was outperforming before. This is a crash I'm talking about. It was early February of 2018. You'll notice that Amazon barely went. It didn't even go under its 50-day moving average, and then it just kept ripping. So that scan, you could have said the market was. Let's take a look at what the market was doing at that time. This was this big crash. Most companies were under their 50-day moving averages, under their 100-day moving averages. Amazon never went below it. You could have done one of these scans, and you could have actually found, wow, here's a stock that hasn't pulled back nearly as much. That is a sign of positive relative strength. It's a sign the stock is under accumulation by investors. And that's the sort of sign where, hey, if you're a big money manager and you believe in a company, you believe in its fundamentals, and a big market event happens and that stock gets hammered, that's the stock you're going to want to be buying. It also helps you see which stocks are not in favor, and by changing the indicators, and then those can very much help you looking to the downside. You can also see, for example, a stock like American Airlines. Like, I like beating up on American Airlines, but energy stocks, which we wrote about many times on Market Insights and on TradingView with a bearish slant, these stocks were all lagging for months and months. And then when coronavirus hit, it was just the straw that broke the camel's back. By noticing relative strength, by noticing stocks making highs and lows, we were able to find those things. And one of the ways we were able to find it was by using tools like this. So I wanted to go back and check one last time because I have a sneaking feeling, and I do apologize, but I have a sneaking feeling that I made a mistake when I created this 2-period changes indicator. Okay, this is my mistake. The start days, I want you guys to go to your easy language tool, which you should be able to see here. The start days should be 273. And the end days should be 36. I did them backwards, so I want to apologize for that. That's the reason why some of the results were off. Just realize the end days is the more recent number. So that's like 36 sessions ago is when the market started crashing. That should be your end days. Your start days should be a year ago, which is 273 sessions ago. So I want to just tell you that. You might want to, you can just, what you should probably do is, here's how you would change it. I'm going to show you right now. It's a very quick thing on easy language. I'm going to change it to 273. Okay, you can hopefully see this. I'm going to change end days to 36. Now, what I'm going to do is I'm going to hit the F3 button to verify. You'll notice down here, there's a little message, no errors. Some of you guys who are using, programming, you've seen things like this obviously before. This just says, all right, your code is good. There's nothing that's going to blow up to cause any crashes. Okay, so now I have changed the indicator. However, it's already loaded into TradeStation. So what we want to do now is I want to just go through. Let's go back to this 2-period changes. I'm going to just kill this completely, and then we'll start over and I'll just show you how it works. Go to studies, go to add study. We're going to go to 2-period changes. I'm going to import that. And I also want to go to my open interest, all options, and then boom. Now, if we look at this, let's actually make sure it's set correctly. Yep, now our start days is 273, our end days is 36. And if we sort, we should actually see there's our AMD, our NVIDIA, Now look at some of these companies. I want to just end by looking at some of these. Look at a company like Advanced Micro Devices. Here's a company that it never closed below its 200-day moving average. Like I said, 80% of the S&P 500 is still below its 200-day moving average. AMD never closed below. And I know you guys at TradeStation, I get to see, like our most popular symbols. I write about that every month on Market Insights. I write about what are the most popular symbols. I know you guys love AMD. I can see where it's there. I write about it all the time. But there's a good example of how these relative strength tools work. Another one that's interesting is Norton LifeLock, which this is just, I don't know much about this company, but it's been very strong. It's even interesting, it's in the S&P 500, but it kind of came out of nowhere. NVIDIA as well, it barely closed below its 200-day. A stock like Apple had this amazing rally. And, so when you look at some of these different things, this is how this tool could kind of work. And I wanted to just emphasize, this is what it looks like correctly. So I do want to apologize. The easy language, I just reversed those two things when I was adjusting it. So it would have loaded that way incorrectly. Go back in and change it in the easy language easy language development environment. Hit F3, verify it, and then go back and reload it into these workspaces. So I want to just tell everyone about that. People are joking about their computers blowing up. All right, so this is going to be on the TradeStation YouTube channel. I think that's correct. Nico, tell me if I'm wrong with that. But hopefully this is good, and you guys have found this informative. Like, I just want to say, I'm not a developer. I learned this by, another thing you can just do is, here's another trick. Just go to an indicator on TradeStation, like the 50-day moving average. Then you can you see this menu, right click on that average. Go to edit easy language. Now you don't want to screw this up, because you're going to want your moving average. So what you can then do very quickly is you're going to go to save as. You can call it moving average, and just call like I don't know, I call it like messing around, whatever. Now I can mess around with it. I can play around with the code and see what happens. And from doing this, you're going to start to see how it works. You're going to see in the beginning the inputs. You're going to see, and those are the things that come up in the menu. Then you have these are variables that have to be defined, and then you're going to notice it as these plot statements that actually output it out to the chart or the radar screen. But a great way to learn is just to go into some of these simple indicators, see how they work, copy it. Like I said, don't ruin the one that's there by playing with it. Copy it over, play around with it, and you're going to pretty quickly see how these things come together. Look at the one I shared as well, and just think about ways you can combine things in the radar screen and scanner. And I tell you, if you play around with it for a few hours, you're going to start to think of stuff. It's going to start to get really exciting. That's the way it was for me, and it's just so exciting to see the things that you can do, because quite honestly, a lot of these guys at big banks and research firms, they have all these tools, and you can do so much of that with the resources we have here. Look at like big research stuff. A lot of that stuff, or a lot of these guys are already using TradeStation, or the thing is that we have those things available to us. So it's such an exciting thing to have at your disposal, and to have instructors like Mike and Jesus who can teach you as well. It's really exciting. I know it might be a little bit intimidating sometimes to get started with code and stuff, but it really is exciting. And like I said, I have no training in software. I just kind of learned it going along. So those are the main things I wanted to mention. I want to also remind everyone, if you go to our Trading View page, TradeStation on Trading View, go to Market Insights, look at some of the articles we run. This is what my colleague Andrew just put up recently, but we write stuff a lot. Tomorrow I'm going to be recapping the beginning of earnings season, or maybe I should call it bank torture session, when they all come out and just say we're going to lose a ton of money on our loans. So these are the sort of things. Right now, Bank of America, JP Morgan, all getting hammered by these, loan problems. It's something where right now that's what's happening. During earnings season, every week I recap the main things. So check it out tomorrow afternoon. You're going to see an earnings story right here on Market Insights. Every day we have new content, new things coming up. Same thing on Trading View. different things that are popping up that are of interest. And, you know, I just look at the market, what's happening. I really like to focus people's energy and interest on those areas of the market that are trending and doing certain things, the big events coming up, but then also, how do you use options to really maximize what you can get out of it? And then also on top of that, how do you anticipate the things that are coming up? How do you use TradeStation to empower yourself? And hopefully this webinar has helped you with that. So thank you, everyone. I look forward to, from time to time, hearing from you and talking to you again in the future. Make sure to check out Market Insights, and thanks so much.